Hey guys, what's going on? So it's Saturday, November 8th, and a few people in the comments have been asking how to sell the options, how to roll the options. They're just starting out. They want to make that passive income. So I'm going to go over everything from beginning to end. I'm doing it on the Charles Schwab app, but other brokerages, their apps are around the same. It's maybe a few different little things, but you'll get the gist of it. And we'll go over how to sell the options, how to roll the options, how to make that passive income and make a little side money on your stocks and on your cash. So let's get to that. It's a nice day out today, so I think I'm gonna go to the lake and I'll show you guys exactly how to do it. All right guys, made it to the lake. Looks like they're having an event here, or about to have an event here. I see all the tents and stuff, but got the nice lake out here. It's 83 degrees here in Orlando, Florida. Beautiful day, hardly any clouds. Good day to get out, come to the lake. I figure I'd come over here, and it's pretty nice down here. So I'm gonna find a spot to go over these options with you guys. So let me find a spot real quick and we'll get to it. All right. Looks like they're setting up for Christmas already. Oh, Christmas. The only thing I think about when I hear Christmas is the packages I'm gonna have to deliver. Not looking forward to that. All right, guys. I think I found a good spot here, and we'll go over these options. I'll show you exactly how you do it and make this passive income, keep that money coming in. I love that people have commented that they're just getting started and they want to learn this, and I'm happy that I'm helping them learn this, because I want everyone to make money, easy money. I mean, we work these hard jobs sometimes, and it's nice to, make a little easy money on the side. So first thing I want to do when I sell an option is I need to pick a stock. Okay, so Yahoo Finance is a very, very good tool. So I go to Yahoo Finance right here. So this is my list. So this is Yahoo Finance. You got to download this app. I'm going to use Carnival Cruise Lines. So that's what I use, and I'll show people why I use that. So this is the first thing you want to do. You got to do a little bit of investigating. You got to find a stock that long term is going to be a good stock and is going to go up. Okay, anything can happen. I mean, we got these tariffs, we got the government shutdown, we got wars, we got, anything can make the whole market go up or down. So when they figure out this whole government shutdown thing and the government opens again, the market's going to go up. Okay, that's just, you got to look at these things, because then when it happens in the future, you'll know probably what's going to happen. Okay, so I'm looking for a stock. I'm just starting. Okay, just imagine I'm just starting. I'm looking for a stock. Let me check out Carnival Cruise Lines. This is what I check out when I check out a stock. Okay, so I go here, Carnival Cruise Lines, tap that, and this app gives everything you need to check out a stock. Okay, so first of all, the charts. You can do 6-month chart, year chart, 5-year chart. You know why I like this chart? Because from middle of 2022, it's on an uptrend. Okay, so the highs are higher and the bottom is higher. Okay, on these peaks and valleys. So that shows an uptrend. So this one, this peak here, this peak here, this peak here, they're all higher than one another, and the lows are all higher than one another. Shows that the stock is on an uptrend. I like that. That's the stock I want. Okay, so second, we can go to financials. You can find out everything about this stock. Here's their earnings for the last 3 quarters. They beat their earnings. Okay, so there is people that give estimates, right? So all these analysis, they give estimates, and they think of what the earnings are going to be. A company that beats its earnings every quarter is a good sign. If it misses its earnings every quarter, It's not good. It's not even making as much as what the professionals think it's going to make. All right, so you got that, and then you come down here, you got the revenue and the earnings for the company. So the revenue is in blue, the earnings is in yellow. Look what you see. More revenue, more revenue, more revenue. Each quarter, earnings was down, up, even, profitable. Okay, so this is moving up. This stock is moving up, which is good. So I look at that, and then I look at the analysis here. So that was the financials, now the analysis. And this tells you everything. It shows you what they think, if it's a buy, if it's a sell, a hold, a strong buy, and this is 57% buy, and you can get more in depth there. It goes by month, but it's you can go 57% buy, and you get strong buy and a hold, no underperform, no sell. So they think this company is going to do well. All right, so then you got the news. It's got all the news articles on this specific stock, right? So this is great information to have when you're picking a stock. Also, you have to look at debt. Carnival Cruise Lines, they have a lot of debt. The pandemic happened. They couldn't put the ships out. They had to borrow a bunch of money to stay afloat. And they're paying that debt back at a rapid pace. So, well, pretty good pace. So, and the stock before the pandemic was $70 a share. You know, this is all the stuff I look at when I'm looking at a stock. Look at their debt, look at their profits, look at if they meet their earnings, watch the news stories. Make sure you pick a solid stock long term. Okay, that's what you want. So now, okay, I picked my stock. I want to sell options on this. First thing I want to do. Okay, for an option, you got to have the cash. So to sell a put option, you got to have the cash to buy 100 shares of that stock, and this is a cash secured put. There's also naked puts and naked calls. I will never do that. That's using margin to do that, so it's like borrowing money, and if you get in a bad situation, the brokerage takes over and they get their money. Trust me. So they're selling your stock at whatever price it is, and I only do cash secured puts and covered calls. Cash secured puts, I have the cash to buy the stock I'm looking at or using. The covered calls, I have the shares already, so I have the shares to sell if I need to sell them. Okay, so all right, so I'm going to Carnival Cruise Lines. I pick my stock. Now I want to sell the stock. All right, so I go to my Charles Schwab app. Let me clear this out. The stock I want to sell options on are Carnival Cruise Lines. And now what do? The stock is at $26.79. I want to sell a put option. I have enough for 100 shares. You got to look at the expiration date. You got to go out a certain amount of time. Okay, so this is 1 week's worth of time. The more time that you pick, so I can go here and I can go 2 weeks out to November 21st. You get more money for that time. Time is worth money. Okay, so I want to do 1 week. It's at $26.73. Now I have all these strike prices. All right, let me just increase the strike prices. All right, now I got to pick a strike price that I want to agree to buy the stock at. If it goes in the next week by expiration date, if that stock goes at expiration goes below the strike price that you pick and agree to, then you have to buy the shares at that price, at that strike price. Okay, so it's at $26.73. I think I'm going to pick $25. I'll agree to buy it at $25 if it by expiration is below $25. Okay, so how much will I get for that? Here's the premium right here. So this is the puts on this side, the calls on this side. We're using the puts to get control of the shares. So how much would I make? I'm gonna, and this is, change this to sell to open. I'm selling the option to open the position. Okay, And how much would I get? You got the bid here. You always have a bid and an ask. You always go in the middle and start there as a starting point. So I would make 13 cents, okay? But I have, this is on 100 shares, so 13 cents times 100. So it'd be $13 I would make in premium if I sold this option, this put option, at a $25 strike price. If by expiration date it goes below the $25, I have to buy it. I'm agreeing to buy it at $25, and I keep the premium. So I keep the $13. Okay. So what happens if it doesn't go below the strike price at expiration? If it doesn't happen and it stays above it, your strike price on the puts, you keep the premium, the $13. It ends and you start all over again. And that's where the money comes in every week. That's the goal, to do that. Okay. So let me just go back here. So that's the put option. So I'm going to move it to 13 cents. Make that $13. And if I have to buy it at 25 bucks, that's a great price. So I would review the order, and then it says, it just goes over with you. It says sell to open, one option, Carnival Cruise Lines, November 14th, 2025, $25 strike price, and it's a put. Okay. So, and then all you do is hit place order when the market's open, and that's it. So that's how you sell a put option. So say by Friday it does go below that strike price. Okay, I have to buy it at $25, right? Then, okay, I've got the stock at $25. It's all over, right? I got the premium too. So what do I want to do now? I want to sell a call option. So say that happened, all right? And now we own the shares at $25, right? And the stock is below $25. Say it's $24.75. Okay, now I own the shares. I own 100 of them. Now I want to sell a call option, and you can make money, premium, that way also. So here we go. So let's start over. Carnival Cruise Lines, option chain. Now we got this side, the calls. So we got it at 25. What do I want to do? You know what? I want to make 50 cents on the stock, and I want to make some more premium too. So I pick a $25.50 strike price, and the calls, if it goes above the strike price at expiration by the end of the market closing on that Friday, and all these expiration dates are always end on Friday. The majority of them end on Friday, unless you get a lot that sell a ton of options. Sometimes they sell during the week also, but the majority of them sell on Friday. Okay, so I want to sell a call option now. I want to sell it at $25.50 because I want to make 50 cents on the stock and keep the premium and get the premium also. Okay, or you can do it. I mean, you can pick whatever you want, but you always want to keep it far enough away where you don't think it's going to get there. So $25.50, I might sell it at 26, maybe $26.50. So, but just for the example, let's go with $25.50. So I would pick the call option, and then I would do the exact same thing. I would sell to open, one option, strike price $25.50. And then here, these numbers are totally wrong. They would be different. They would be much less, because it wouldn't be the same as these. These are, because everything's off. The expiration date's off. We're acting like we've already got the shares, so it's different. But you always go in the middle, like I said, and then you adjust it from there. So say you sell an option and the premium is at 10 cents, 15 cents, let's say 15 cents, and it doesn't go through. You can always go back, and there's a button to adjust it, and you can just go down a penny. Try that, see if it works. You'll see in my videos, you'll see me do it in my videos. So look at past videos and you'll see me do it. I do it in half of my videos. Okay, so, and then it eventually will go through. So So you make premium on the puts, you make premium on the calls, and you just keep that premium coming in. But you want to go far out enough. The goal is to have it expire worthless. So you don't want it to be above the strike price on the calls, and you don't want the stock price to be below the strike price on the puts. That way it just ends, you collect the premium, and you move on to the next week, okay? So that's how you sell options, the puts and the calls. Now we get to what's rolling an option. Okay, I'll show you exactly what rolling an option is. So, okay, I'll show you this. I have options out right now. Let's go to my list of options. I've only got 2 out right now because my stock went down a little bit, but I'm gonna change that next week. So I've got this option right here, Carnival Cruise Lines 2650 put. I've got it out right now. The expiration date is November 14th. I want to roll the option. Rolling it means adding time to the expiration date, putting it out for another week. This is weeklies now. People play options a million different ways. I'm showing you how I play it, okay? And I've been pretty successful. I'm up like I've made on just options this year. I mean, I work with like around 120,000, 125,000. I've made 20, and I didn't start out with that much. I've made 23,000 for the year so far. Just over that. Last year I made 13,000. So it works. Yeah, I've been doing it for a few years now. This works. I mean, if you watch my videos, you know it works. Just keep watching my videos, and if you like the videos, subscribe. I put all my option sales on my videos, all of them. I mean, I might miss one every now and again. Very rare. 99.5% chance that I'm selling all the options on camera and showing all you guys, because I want you to learn, I want you to ask questions, and I want you to make the money. So rolling an option, that's just adding time to it, making more premium on it, because you're, say, adding a week of time to the expiration date. That time is worth money. You get money for that, okay? So I've got these 2650 puts out right now. They expire the 14th of November. If I just tap it and I go to roll position, here's what a roll is. So a roll is I'm buying it back, and this happens all in one shot. So I buy back the option, and then I sell it for the week or whatever I want, whatever date I want on the expiration date. But this I always do 1 week further out normally. So that's 1 week further out. It shows I'm buying it back for 50 cents. I'm selling it for 78 cents. I take the middle, 29 cents showing middle. So I make $29 because I'm adding a week's worth of time to it, and I'm keeping the strike price the same. Now you can change the strike price by tapping this. I might change it to $26. Okay, what happens then? Then I would buy it back for 50 cents. I would sell it for 57 cents. I would make less money on premium, but I'm lowering, where is it? I'm lowering the strike price by 50 cents. So instead of having to buy the shares at $26.50 now, I'm going to buy the shares at $26. So that's cheaper, right? So I can do that, change the strike price, and still make money. Credit $7. So I'll make $7 on the premium. By changing the strike price, I'm able to buy it 50 cents lower, times 100, okay? So I'm still making money on the premium, and I'm buying it at a lower price. Win-win for me, you know? So that only happens in certain circumstances, but if I was to keep the strike price the same, I buy it back at 50, I sell it for 78 cents, 50 cents, buy it back for 50 cents, sell it for 78 cents. I make 29 cents, which is $29. It would show right here. I keep the strike price the same, and because I'm putting it out for another week's worth of time, which time is money, I get that $29. Okay, and then the expiration date is November 21st now, and then you, when it gets close to that, you pick a day. I do it on Tuesdays. People are like, why do you do it on Tuesdays? Why do you roll your options on Tuesdays? And that's because if I'm in a position where the stock drops or moves too much and it puts me in the money, which I don't want to be, we don't want to be in the money, okay? We want to stay out of the money. So, like I told you before. So, if a stock moves too much and it drops, and I do it on Tuesdays, every Tuesday, then the expiration date is 3 days later. It gives me 3 days of a cushion where the stock can recover. And on the videos you've seen, just recently actually, where that happened, and I had my 3 days. The stock recovered a little bit, less than I wanted it to, but it recovered a little bit, and I was in a better position. So if you wait till the expiration date and something happens like that, you don't have any time to recover. So you got to just let it expire, buy the shares or sell the shares, and I just don't play it that way. So I do everything as safe as possible. I mean, 95% of the time, I do everything as safe as possible, unless I kind of think I know what the stock is going to do in the near future, and then I might get a little, risky. But majority of the time, everything's safe, and I want to teach you guys how to do it safe too. And you can make income off of this every week. So like I was saying before, I use my car money. I use my car money. I said it in a past video. So I saved money for my car, right? I paid off my car. I was making payments and then saving money for my next car. I was going to use that saved money for my next car. What I did, I got to a point, I was selling these options. I had done it for a couple of years. There's steady money coming in. I'm like, if I use this car money to buy my next car, all the capital's gone. What am I going to have to sell the options with now? Nothing, right? I got to start all over. So I used a little bit of it, of my money, but I got a loan on my car. I kept selling the options. The money I made on the options paid for the car, and I just kept the capital I had, used my money to make money, which paid for the car, and I didn't have to spend the capital and get rid of that and start all over. So capital is the most important part. You got to have the capital. The more capital you have, the more money you make. But you got to start somewhere. You're not going to be like, okay, I'm starting with 100 grand. No, not everybody can do that. Some people are starting like I did. I was making $10-20 a week starting off, and then I did it for a while. I ended up taking a loan on the money, and I took a loan on a HELOC on my house, and I got more capital. I made money with that. I did the same thing as I did with my car. I paid back the loan with the money I made from selling the options. So it's a beautiful thing. So that's how you roll an option. That's how you sell an option. I want everybody to learn how to do this. That wants to, and the more, research you do, the better you'll get at it. And when you're just starting out, don't start, even if you have the money, don't start selling like 10, 15, 20 options. If you're just starting out, sell one option. Sell one option for 6 months, like 6 months, because selling one option and selling 100 options, it's the same process. So make sure you got a good, schedule and a system down, okay, to sell these options like I do, and the money will just keep coming in. You're going to run into problems every now and again, but you know what? I downloaded that app called ChatGPT. That thing is amazing. Let me show you guys. It's crazy. Like, you can ask anything on this ChatGPT and it'll answer it. So check this out. Watch. So I go to ChatGPT How do I sell call and put options? Here's a clear setup, step-by-step guide on how to sell call and put options. It tells you exactly how to do this. Step one, I mean, it gives you examples, it gives everything. Okay, look. Set up your brokerage account. It tells you, I mean, you got to set up your brokerage account. And sell a call option, naked calls. It tells you everything. Sell a put option, and then it gives you examples on how to do it. I mean, this app is unbelievable. It's great. They have a ChatGPT Plus, and I just signed up for that. It's like $20 a month, but it's great. I mean, you can learn a lot. I've learned a lot from it. I can ask it anything and learn anything I want to know. So, good tool to have. So, all right, you guys. So, you know how to sell the call options and the put options, and you know how to roll options. So it's just steady money coming in. It's watch my videos. If you like the videos, subscribe if you would. It helps me out a lot. I'll help you out. You help me out by subscribing. If you have any questions, ask in the comments. I'll answer the questions. If you ask the people that have commented, I comment on just about every comment that I get. Okay, I'm here to help you out. That's what I want you to do, is make money. So if you have any questions, I'll answer the questions the best I can. So that's about it. I mean, I want everybody to make a lot of money. I want everyone's life to be a little bit easier, you know, like, let's make this easy money. I work all day, you know, delivering these packages in the heat and the rain and lifting stuff and going upstairs, and I'm sure a lot of you guys, you work pretty difficult jobs also. Isn't it nice to make money in 5 minutes just by pushing a couple buttons? You know, it's great. It's the greatest thing ever. And I've been doing it for a while, so it's not like, oh, it's horrible at times. And I'm down on the stock I use, Carnival Cruise Lines. It's way down. I'm in to be honest with you, a pretty, not horrible, but a pretty crappy position. But with the covered calls and the cash secured puts, you own the stock, so all you gotta do is wait for it to get into a better position. That's why you pick a good stock, and then you just do it really safe if you're in a bad position, and then once it goes up, you make more money. You'll see, like, the earnings are coming up on Carnival Cruise Lines next month. Watch how much I make when the earnings come up. I might be not making too much. I made like $99 last week. Before that, like, my average is around, I'd say, $500 to $600 a week. But some weeks I'll make $700. Some weeks I'll make $100. During this past earnings, I think I made $2,400 in 1 week. Okay, it's a beautiful thing. Everyone should learn how to do this. I want all you guys to learn how to do it that want to, and let's all make some money. All right, guys. I think this video is long enough. This is probably the longest video I made, but I really want you guys to understand this. So if you have any comments or questions, just ask in the comments. Like the video, share the video. I really appreciate everyone's support, all the regulars that comment. You guys are awesome. So let's all make some money and have a great weekend. All right, bye.